All right, welcome everyone. Welcome to SwingTrader status update for June 18th, 2024. And with me is my good friend, Mike Webster. One of our good friends is not with us, and that's Justin, because he's hanging out, I think, at a bar somewhere.
Somewhere in Costa Rica. If you're in Costa Rica, just shout out, Justin, where
Yeah,
are you? You
right.
know,
All right.
shout out Justin and Wilson at the same time and in my work.
Good call out. All right. Well, we're going to be taking a look at what's been happening with SwingTrader over the past week and what we're thinking about going forward. And Mike, where would you like to start?
Yeah, let's just start off with the markets. Why don't we pull up Nasdaq and market surge, and we can start
Okay.
there.
And let me zoom in a little bit.
Okie doke.
All right.
All right. So as we've been talking about for a while now, we're deep into a power trend. That's something that Justin, Charles Harrison, and I developed as part of the market school rules, and it's basically a time where you want to be more aggressive than you'd normally be, and that will end eventually. They always do, and it'll end when that green line, which is your 21-day moving average, crosses down below your 50-day. So you can just tell by the distance we are above the 21-day that by the time that this ends, we're going to see have a lot of damage. So it's not like we wait until the power trend is over. We're always looking at key items to know when to take the your foot off the accelerator or tap on the brakes or even slam on the brakes. But for now, all is good. But we are, one of the themes that we're going to be talking about today is the fact that we are getting a little hot and things are getting a little heated over the 21-day. We'll circle back to that in a little bit. Let's take a look at SPYs because it looks, SPY looks similar, just not as stretched as Nasdaq does. So it's still very healthy there. Still, we're in a power trend, and it looks like it just wants to keep going. But even in power trends, you will see, corrections and things will just, they don't go straight up. And let's go to the Qs, which pretty much look the same as the Nasdaq, just a little bit stronger in some ways. And with the Qs, once it pulls up, for some reason, I'm not seeing it yet, but there we go. This is getting also a little bit hot, in the distance between, where we are and our moving averages is, getting stretched. And we're going to look at the Webb RSI in a few minutes to kind of go over that. But I'd like to look at our 2003 to 2009 precedent that we've been using. And Dominic, is there a way that we can pull that one up? Just let me know when it's up, because I can't see it on my end. Okay, perfect. So on this chart, this is something that Justin built for us before he went on vacation. So it hasn't been updated. This is as of a few weeks ago. The top line is our current market. The orange one is the 03 market that we're using as a precedent, and the 09 is the one on the bottom. And you can see the 03 and the 09 are almost identical. And then you go up and you look at ours, and it looks, pretty much, identical with just a few variations. One, that 8% pullback that we had just happened, a little bit later in the move than the other two. And you can see that red line, the vertical line there, that is where we had our follow through day. And so just putting, all three of these together, it kind of gives us a nice roadmap of what we're expecting. So what does this mean? The takeaway is we still think that we've got a lot more to run if these precedents hold, and we will keep using these precedents until it stops working. And right now it is, fully intact. But you can see there on the right side of this, things do get a little bit choppy, and you do have continued pullbacks. And so we are expecting those, because that would be the norm based off of these precedents, these two precedents, plus any bull market. I mean, Chris, do you remember any bull market that just went straight up without coming down?
Some have gone straight up, but then they really came down.
Exactly, right? Like in the very late 70s on Nasdaq and like
Right.
78 or so, you had that runaway market that just never looked back. And then of course the tail end of 1999, you had that where it just kept going up and it never looked back. So with that in mind, you don't want to say, hey, we're just getting too hot and bail on everything. What you want to do is kind of rotate when one index is getting a little bit hot and try to move into another one. So why don't we toggle over, if you don't mind, can we toggle over to my trading view, Dominic? And just let me know when we're there. Okay. All right. So this is the queues using a different platform where I have my Webb RSI, my latest version, the version 5.150 in there, and that is different than the original version, which was percent based. This is ATR based, and that's just a way of saying that it's just normalizing for the instrument, saying, you know, every one ATR, which you can see over here on the right side, that is just a normal movement for any given day, and I just measure it in 21 days. So when what we're looking at here, this, and focus your eyes in on this blue histogram, and that is your low versus your 21-day moving average. So here is today's action, and that's our low, and this green line, that is your 21-day moving average. So this histogram is just measuring that distance, how far above in ATRs. And I always say that the sweet spot tends to be about a half a ATR, which would be down here, up to about 3 ATRs. And once you get up to 3 ATRs, that's a bit on the hot side. Doesn't mean you're going to fall apart, but it just means that's a time to start locking in some gains. And I'm going to zoom back out, and you can see historically where these tend to top out at. And we'll just look at the blue histogram there. You know, right, it tops out right around 3, tops out just before it gets to 3. Same thing over here. So now we're at the hottest level that we've had in quite some time. So on SwingTrader today, we reduced our QLD position, which is just a double of the Qs. And so we reduced it from a full position down to a quarter position. Not saying that we're negative on the market, but just saying we wanted to use that cash, lock it in up here, use that cash for some other new stocks, as well as maybe some future positions, either ETFs or individual stocks. And we did the same thing with SMH, which is, of course, the, and I have a position in both of these. And so this one was also getting hot, not as hot as it's gotten historically. You can see over here in early March, it got up over 4 ATRs, the low versus your 21-day. And so now you're almost up there. So it could, you know, based on its own history, it could continue to run a little bit. But again, we just wanted to lock some profits in there as it was getting hot and trying to move those proceeds into some other stocks. So one that we put on today, and this is one that Chris mentioned on IBD Live this morning, and I'm going to test Chris out. Chris, who should watch IBD Live? It starts with an E.
Yeah, I'm going to say everyone.
Everyone. Okay, so you have been watching these. Okay, so we went ahead and rotated in, and we just started off with a quarter position, and that's something that we talked about last week, that we're, rather than starting off with a half or 3/4 or a full position, most of the time right now, as we're kind of casting a wide net and seeing where the rotation is going, that we're going to be starting off with quarters and then adding to them as they work out. And what's your take on Goldman Sachs, Chris?
Well, you know what I like about it is that it had such a great run previously, and kind of an unusually strong run for this stock, at least lately, and then a very normal pullback, and then you know, it came into the 50-day, got support, and today, you know, broke above the 21-day, and it also closed right at, or maybe slightly higher than the June 12th high. So it was just good action all around.
Yeah, I totally agree with all of that, and you can see by looking at that Webb RSI on here, this one also kind of capped out right around 3 ATRs this time. Back here, it did get a little bit hotter than that before it died. And now our low isn't even above our 21 days. So that means that's what we're trying to do right now, is rotate out of the ones that are really hot and into ones that are strong but not super hot. We'll see how it works out. Of course, we have the the 50-day, which isn't far below us, as a natural stop. And if it gets stronger, we'll increase this from here. And I think at this point, why don't we pull up the pie chart to kind of show them where we are from a sector basis? And why don't you let me know when that's up? Okay, so you can see that we've moved out of a lot of the ETFs, which are in the miscellaneous area. So that right now is just our QLD and our SMH position. We're pretty diversified, at least on the left side of the chart, but on the right side, we're getting a bit too heavy in the retail and the apparel space. So that is a warning to ourselves that, hey, look, we're going to start looking for things not in that area. But that's just what's been working right now, besides the chip space. And a lot of the chips were just too extended for us to be putting them back on after the gap up that some of them had on earnings. So with this, we're just saying, okay, we're probably going to avoid doing much more with apparel and retail, but there are a lot of other places that we can rotate into and increase. And one place would be the energy space, software, of course, and then the banks are starting to look good. We thought the medicals were going to work, but they're kind of kind of just playing possum a little bit for now. So we're not doing much new in that space. Anything to add on this, Chris?
No, I think it's really good to be looking at those sectors and ready to move, and noting that there's rotation coming in and taking advantage of that. So makes a lot of sense.
Okay, perfect. So why don't we toggle back to market surge, and we can look at some other changes that we made recently. Why don't we take a Is it live? Okay. So why don't we go ahead and go on to on, something I have a position in and something that we increased. And so yesterday was really, this is something we've had on for a bit now, and we were able to survive yesterday's sharp sell-off by just, again, last week we talked about trying to take less action in the middle of the day and trying to make more of the decisions late in the day. To help us with some of these wiggles and wobbles that we were frankly just getting chopped up in, because I was being a little bit on the tight side. I like keeping my losses, frankly, even tighter than what we do on SwingTrader. But I realize that a lot of you who are watching this and seeing all these alerts, there was just a bit overkill for some of you. I mean, frankly, I trade even faster than this. And so just trying to dial things back. I mean, a good rule that I used back in the 90s was, if I bought a stock, if I wasn't up on it on the end of the day, I would sell it. So I got very comfortable with buying something. If I wasn't up on it, it just meant to me I did something wrong. It was either the wrong stock, the market was wrong, or my timing was wrong, or a combination of those. So that's how I'm wired. But I'm also aware, and I'm listening to the feedback and realizing that most people aren't comfortable with that high of a turnover. So we're dialing things back. What does that mean? That means we're going to have more smaller positions to let them wiggle and wobble, with still maintaining a solid risk level. And then the other, and adding to the ones that are working. But also some of our losses are going to be a little bit bigger than what I'm comfortable with for this particular product. But again, we want to make sure that this is accessible to everyone. So with that said, we've made this now a full position here, because we were able to withstand yesterday's action. We're back above our 21-day, which is our green line. So our expectation now is for us to go through the highs from the from last week. And if it does that, I mean, there's always room to make something more than a full-size position. With SwingTrader, our full-size position is only 10%. So in the future, you should expect bigger than full-size positions in mainly ETFs. So let's pull up QLD, for example. That was one that we reduced today, which is just the double of the Qs. What we're hoping for is for this either pause and go sideways and then give us a new entry, or more ideally, at some point have a little bit of a shakeout and an upside reversal. At that point, we would increase it, probably back up to a full position. And then I really would like to get this up to like a full plus a quarter or full plus a half. Same thing with the SMH if we get that opportunity. But we're just going to go ahead and manage these positions, selling some when they're up and then adding to them back when we get an upside reversal. Booking was another one that we were looking at and that we increased today. And we were looking at, let's pull up HLT, Hilton, because that was one that we were thinking about putting on as a fresh position, as a 2.5% position. But really yesterday was your ideal time to buy that as it was clearing the highs from the last couple days. So rather than putting in the new position on that was a little bit out of position for a swing trade, it would be fine for a position trade, meaning position trading is kind of your orthodox, the way that Leaderboard does, and they do a great job of more of a 7 or an 8% is your typical max loss there. So let's go over to booking. And so what we decided to do is just increase our existing position there because it was breaking out yesterday, and we had already had it on. And now it looks like it's a magnet for 4,000. If it can get above 4,000, it should go, a lot further. Once it gets through a round number, we might even increase it more than that. But that's just something to expect with SwingTrader product, that we'll be managing these positions. You're going to see a lot more of the quarter size positions on as we're just getting seeing which ones get traction. The quarter size positions that work will be increasing. Like, let's go back to the Goldman on here that we were looking at earlier. So this one, yeah, if it moves higher tomorrow, we might increase it up to a 5% position. But at the same time, what we'll be doing is looking at that same group. Let's take a look at JP Morgan. And we'll say, okay, does JP Morgan make more sense than increasing our Goldman Sachs? Let's also look at Morgan Stanley and Bank of America. And these are the decisions that we'll be making. You want to be making these same decisions. Maybe you don't even want to go rotate into this space. There's nothing wrong with that. And yeah, let's look at Bank of America. And looking at all of these, I think, as it stands right now, that Goldman makes the most sense to add to, and then maybe a secondary would be Bank of America. So that's just how you should be looking at things. Whenever you buy a stock, play through the entire group and just decide which one is your best one. Sometimes, like if it's a home building group, you have a lot to choose from, or you just go with the ETF. What are your thoughts on that, Chris?
About ETFs versus individual
Yeah.
stocks? Well, quite honestly, what I found is if you're not in the leader, it often makes more sense to go with a leveraged ETF, and you'll and that way, because most stocks do not beat triple ETFs, and you really have to have a big winner. So, like for example,
like XBI versus LabU or something like that.
Yeah, or let's say you missed NVIDIA, but you want to be in in the chip space. So you could always try Soxhole, although this one is very
yeah, I do have a position in that one. I did reduce it some today, but yeah, it is very volatile. But I completely agree with you. On that the doubles and the triples, while they have negatives associated with them if you're holding them for long periods of time, and that's a topic for another day, but it's just rather minor, but it's not something that you want to hold for years, the doubles or triples in inverse or just the normal direction. But yeah, it's a great way because you get the diversification, but you also get the extra juice with using the double or triple, which is what we did with the QLD instead of the Qs. We pull up SPY if you don't mind. We'd removed SPY a little while ago, hoping to get into SSO, which was is the double of SPY, and it just didn't give us that entry point, the ideal entry point. So that's the risk. Sometimes when you remove something, like what we were doing with QLD and SMH today, not removing it, but reducing it, that you run the risk that they just keep going up without you. And I think that that's a strong possibility, but also if you're swing trading versus doing orthodox trading, you do need to lock in gains when things are stretched. And I'm going to just toggle back to TradingView for a moment, if that's okay, Dominic, because I just wanted to show one other thing with the, let's see, tell me when you can see it.
We see it.
Okay, so the other part of this Webb RSI is not just the blue line, which is your low versus your 21-day. It's this orange line on here, and the orange line is your high versus your 10-day simple moving average, and that's something that I started using back in 1998, and just found that it was very helpful when you're swing trading, of locking in when that extension gets back then I would use 15%, but I've really gotten away from percentages and switched more to this ATR, because then it makes it specific to the stock or the instrument you're looking at. And so when this orange line, again, that is your high versus your 10-day, gets to an extreme level around 3 ATRs, that's another time to start locking in some gains. So you can see this orange line there, spiked above yesterday, also spiked above it, or right near it back in early January, spiked above it in early November. So when those spikes happen, they tend to just kind of come down and kind of, come back into a normal range, which would mean you either go sideways, which allows that moving average to catch up, or you pull back in. Let's do the same thing. Let's just look at SMH. Same thing here. This is now at the high versus the 10-day is now at its highest point since back here in early March. And you can see in early March, that's when NVIDIA, which we both have a position in, had peaked out right there and that was pretty high up, almost 6 ATRs back above when it was sold into, and it just needed to digest. So again, that's how we're managing these, and so when you see us starting to trim, and I'm done with that, Dominic, you can remove that. That when you see us taking things off and it doesn't make any sense, well, why are they reducing QLD or SMH up here? That's why we're doing it, and just really to give us dry powder to spread out into other names. And that's all I had for today, unless there's something I forgot or anything you want to add there, Chris, otherwise known as, what is your name?
I hear someone calls me BB.
Someone calls you BB. That's me. So I am a huge BB King fan. I've always been, and luckily I was able to see him a number of times. In fact, even one time, front row center, I could have touched his foot if I wanted to, and I regret not doing that. But anyway, so I hold him up here, and I always wanted a big brother. I have a big sister. I don't have a big brother, and you're my big brother. And you're a big brother to pretty much all of us at IBD. That's how people look at you. And you're also Chief Content Officer, really chief of everything. So we are calling you, instead of BB King, BB Chief. I hope you're okay with that.
Yes.
You're okay with that. Okay. All right. Because for those who don't know, I've been trying to get a nickname to stick with this man, otherwise known as BB, for years, and nothing's worked. We've tried some other ones that I won't bring up, and they haven't stuck. So that's all I've got for you, BB. Do you have anything to close this out with?
Well, just hope that the next time I see you, I don't act like a big brother, as some big brothers can act. But,
yeah, you're gonna be like McFly.
Yeah.
Oh, Well, great. Well, my connection is starting to get bad, so it's probably a sign from someone that it's time to wrap things up. And Justin will be back with us next week, hopefully, unless he decides to stay in Costa Rica, which I would not blame him if he does.
All right. Well, this is really good. And I got to say, I'm really liking your RSI indicator more and more. So I think
Oh,
it's
thank
very
you.
useful.
I appreciate it. I appreciate it. That was a fun one. And one day, just so people know, this isn't something we're going to keep on outside services. As soon as we can get it integrated into Market Surge, we'll be doing that, as well as a bunch of other things that that we're working on that we can't wait to share with everyone. But we didn't want to keep it under wraps while we're building it, so that's why we toggle over to outside services sometimes.
All right. Well, thanks everyone, and we'll see you next week.